Hello, everyone, and welcome into CrushTheStreet.com. I'm Kenneth Amaduri, and I'm joined today with a very special guest, Jeff Swinoga, CEO of First Mining Gold. He's got 25 years of experience in mining and finance. He's a all-star, rock star in the resource space. And you know what? First Mining Gold is a top pick for us here at Crush the Street. So it's an honor to speak with the CEO. Jeff, thanks for coming on Crush the Street with me today.
Thanks, Kenneth. I really appreciate you having me on the show. I've watched your show many times, and I really appreciate being here.
Thank you for that. Jeff, let's start off with the economy. You know, it's been in the news here, trade wars, stock market fears, really triggers for gold. But what are your current thoughts on just all the moving parts that we have going on with our economy and just your general assessment on things right now?
Thanks, Kenneth. What my personal view is that we're seeing a lot of complexity, a lot of geopolitical risk. It changes day by day. We have situations where, as you mentioned, the trade wars, North Korea is hot and cold. We have a situation where there's inflation in the U.S. It's supposed to be increasing this year with some potential rate hikes. And the impact for gold is that it's very positive. We're seeing a lot of fundamental demand coming into the market. We're seeing that Russia has been a prolific buyer of gold in Q1 of 2018. In fact, of the central bank buying, Russia was about 35% of that buying. So, China's been a big buyer of gold. So a lot of sophisticated institutions with access to a lot of intellectual capital are putting their money into gold. And that might be the fact that they might see a devaluation of the US dollar in the future. And or a diversification perspective. So I think that's very positive for gold. In fact, just on the demand side, it happened 2 days ago. I saw an announcement where I think the second wealthiest Egyptian, he's got $6 billion. He basically got his wealth from growing telecom companies into these massive companies around the world, and he's made a call. He's basically wants to invest $3 billion or half of his net wealth into gold. He came out publicly with that about 2 days ago. So we're seeing a lot of positive demand coming through. A lot of people actually making that type of that call. On the supply side, we're also seeing a deficit with respect to the major gold companies. Their mine supply is dwindling. They haven't invested in exploration in the last 5 years to the degree that they should have to replace reserves in the future. So what we're seeing is a supply deficit. So demand is holding up and to a large extent, and we're seeing supply dwindle. And gold's a very scarce metal. If people don't realize, all the gold above ground is you can fit inside an Olympic swimming pool, basically 21 meters cubed. So it's very visual, like people see it on rings and necklaces, but it's actually a very scarce metal, very hard metal to find. But from this political environment, gold is seen as a kind of a safe haven, a hedge against U.S. dollar inflation, kind of a go-to metal in times of political strife. People have been attracted to gold and trading gold for the last 2,000 years. I think it's in our human nature to be attracted to it, and I think it's going to go forward.
Yeah, it really does seem like people are accelerating their accumulation of gold, especially in this time where things are just so uncertain. And we just got news, Argentina hikes rates to 40% to stall currency, bond market collapse. Granted, it is Argentina, and just in 2018, bond prices in Argentina, collapsed around 10%. I mean, going back, I think just into December of 2017, the chart is down 20%. But it's a reminder that gold is very important. I mean, especially for the people in Argentina who are dealing with such a geopolitical risk. I think we take it for granted how important gold is.
No, that's I've got some personal experience with Argentina and some of the political risk and economic risk that they've been through. Back when I joined Barrick in 1998, everyone said, "What are you doing? Gold's $260 an ounce." Analysts were saying it's going down to $200 an ounce. Everything's going virtual, and mining companies were turning into internet incubators, and it was saying, "Jeff, you're making a big mistake joining a gold company at this point." And in fact, the next couple of years, gold basically doubled. So it went from 260 to 400 and just above that. So it's in times when you think gold's not going to move, it breaks out. So we're seeing a lot of the fundamentals now. There was a mine in Barrick called Veladero down in Argentina. We were working on a financing for that, and that was a tough time because Argentina was challenged in terms of meeting its obligations to the World Bank. We saw interest rates spike like we're doing now. And gold, not just Argentina, but gold did respond, as I mentioned. So it was a very good time for gold. That was a time when a lot of the tech companies were seen as being very favorable, and gold was doing quite well as a go-to metal. So with respect to holding gold, I think countries like Argentina, where they're seeing hyperinflation, other countries, holding gold makes a lot of sense. Of course, India has been a big buyer of gold because of the culture. They see the value there, and I think other countries will realize that holding gold is attractive for them as well.
Yeah. One thing that we just had here in the U.S. was the 10-year Treasury bond hitting 3%, a real pivotal number. And psychologically, for, a lot of reasons. And so I'm wondering, do you, in terms of how the economy is going, the mainstream is saying we're having higher interest rates because things are getting stronger, but we're also in a world where, we're more leveraged than ever, and it's questionable whether or not the economy can even sustain higher interest rates. It's not apples to apples to when we had 3% on the 10-year Treasury in the end of 2013 or 2014.
Mm-hmm. Yeah. So the real interesting thing here is when you have inflation and you have rising rates and you need those higher rates to attract capital from foreign countries to buy U.S. Treasuries and also domestic demand. It's a very interesting time right now because whether the Fed can actually raise rates to hold back inflation or whether inflation is going to be a little bit. Every economy needs inflation to grow. I mean, that's been around for decades in terms of economic theory, and so the implication for gold is that we're seeing that how much inflation is going to come through, and how much of a hedge will gold be with that inflation. So I think that it's interesting to watch in the next year or two how this is going to play out. But the fact that the U.S. has, I think, about 21 trillion in debt. I mean, that's a huge number. A lot of people don't worry about it too much, but what we're seeing is that the rates have to rise to attract foreign capital. And if they don't attract foreign capital, then rates could rise more because of the debt situation. And that implication with inflation is very important as well, because I think gold is a good thing to hold from a diversification perspective. So I think it's interesting to see the next year or two and how it plays out.
Right. Well, as the CEO of First Mining Gold, a company well positioned to thrive in an upwards move, how is the company readying itself to benefit from the current gold price?
Well, I have to tell you, I'm very fortunate to be here with this type of assets that we have. If I can step back for a second, Kenneth, Keith Neumeyer over the past 3 years with his team in a lower gold price environment has accumulated 25 properties. Keith is a company builder. He's one of the founders of First Quantum. He's the CEO of First Majestic, and this is his gold company. And so when I joined about 3 months ago, I had a well-diversified, large resource base to work from. I love building projects. So I've got a deep background in project management. So it's the way we're aligning ourselves is to look at, we've got a great management team, we've got 30 plus staff, great technical people, and we're advancing these projects, and we're focusing on the largest projects and most prosperous projects that make sense for shareholders. The key one is Springpole. Springpole's got 4.7 million ounces of gold. It's considered one of the largest undeveloped gold properties in Canada, if not the world. We have it in our portfolio. We're advancing it. We've already kicked off the federal environmental assessment. We're looking at the provincial as well. We've done a number of check the boxes, small things to kind of advance that project. And we're thinking we can get first gold within about 5 years. So again, we consider this a big boy project. Net present value is over $800 million, or approximately $800 million US, $1 billion Canadian. So 300,000 ounce producer in Ontario, Canada. So it's a very scarce in terms of how many projects like that are in a jurisdiction. You don't have to go to South America. You don't have to go to Africa. So we're very pleased to have that inside our portfolio. We've got 3 other projects in Ontario as well. Goldland, Cameron, and Pickle Crow, former producing mine, produced 1.5 million ounces in the past. We've been drilling at Goldland, and we've had drill results out, and we're going to do some step-out drilling to demonstrate the true nature and the size of that property. So very fortunate. We're allowing ourselves to add value to shareholders by advancing these projects. And again, very fortunate to have, again, 4 properties in Ontario. We also have one in Newfoundland called Hope Brook that we're looking at as well. So I think we've got a great foundation to grow from.
Jeff, yeah, is gold, are you looking for a specific price for gold to hit to really start to, wake up the junior mining sector? It just seems like, with 2016, we had that kind of a fake out year in gold for it to kind of come back in 2017, go back under 1,300 and, to lose some of that enthusiasm. And even now, going into 2018, we hit, 1,350 or so in gold, and gold's starting to kind of trickle back a little bit. It seems like gold, we need some sort of really definitive confirmation to the upside to really wake up the mining sector. So is there a specific number that, you're thinking would be a really good price for gold to hit for things to really start to turn around?
Well, other CEOs have quoted 1,400 as being sort of the gold price for large gold companies to start reinvesting more in exploration and so forth. I think it's got to be higher. I think what we're seeing is a potential breakout for gold. The way I described, and I've been watching gold for over 25 years. What I've seen, and again, joining Barrick at $260 an ounce, what I've seen is that gold has got volatility, but it's also got positivity. It's a positive trend moving forward because again, it's compared against money that's being printed. You have an inflationary environment where it's being compared to. So you have that positive trend with gold moving forward. It will have volatility bands that go up, but I think what we're seeing is a situation where gold could break out. You've got, again, this $6 billion wealth individual making a bet on gold, putting half his wealth in, and he's doing it at 1,300. He's not doing it at 1,000. So from our perspective, I mean, we don't need the gold price to go higher in order to keep advancing our projects. Springpole, for example, again, almost 5 million ounces. If you run the numbers at $1,000 gold, the IRR is still 14%. So at 1,300, it's over 26% after tax. But we don't need gold to go higher in order to keep developing our projects. But I'm actually very positive on gold. I think it's going to move higher. I think the juniors will wake up, and I think there'll be more M&A because these large gold companies, again, they have not invested in exploration. So there's going to be a situation where they're going to have to go after companies that have large resource bases, diversified in mining-friendly jurisdictions, and that's how they've done in the past. 5 years ago, when gold dropped off, they were divesting, shoring up their balance sheets, showing that they can keep their margins, right? But now with gold potentially breaking out, it'll be the opposite. They'll look for replacing their reserves as soon as possible.
Jeff, so what does a bull market then, for people who have been in kind of this bear market environment, although we have seen positivity in gold, as you pointed out, but for people who've, really felt the bear market since 2011, what does a bull market in the resource sector look like? Does it extend a number of years? What are you looking for in terms of a turnaround when it actually happens?
Yeah, and it's a great question because even though we talk about gold doing well over a long period of time, there has been that volatility. So when gold hit 1900, people say it's going to 2000, and then it kind of dropped off. And so and that's, I think it's healthy to do have that type of volatility. People are attracted to it, and as an investor as well. So I think what's going forward, we seeing the supply deficit, seeing the fundamental lack of supply coming from these major gold companies, and lack of exploration money. The fundamentals reporting is there, and with geopolitical risk, I think it's got um, a lot of potential here to break out. So this is kind of a bull market now. I mean, I would suggest that we're over 1,300. We've seen South and North Korea sort of shake hands, and what did gold do? Gold didn't really do much. So that means that either there's fundamental demand supporting it, or it's less driven by that type of event. So I think that there's a lot of other geopolitical risks happening in the world, as you mentioned, Argentina. So, I think that what we're going to see that positivity. We certainly could see gold jump and maintain, and then it might have a new range, if you will. So the old range has been basically 1060 to 1350 around there. So when it breaks out, I think we'll have a new band to talk about, and I'm looking forward to that.
Yeah, I think people are so conditioned to think gold can only hit 1350 now, at the highest. But
Yeah.
once gold starts to really show its true potential, that's when you're going to have a lot of people starting to jump on board and jump on the bandwagon, which is why it's smart, in my opinion, to be looking at gold now while it's under the radar in many ways. So, Jeff, first of all, I want to thank you for coming on Crush the Street. I'd like to give you an opportunity here to just share some closing thoughts and maybe your words of wisdom here going forward in 2018 as the markets and precious metals and everything are converging. What are your general thoughts and your advice to the audience?
Well, my advice to the audience is that I mean, if I would say educate yourself, understand. I'm a big fan of gold, and I have been in various gold companies in the past. I'd also educate yourself on your diversification strategy and whether gold can have a place in there. I think that how you mitigate risk, gold can be part of your portfolio that way. I think we're going to see more volatility in the market than less going forward. I mean, we've had a great run in the U.S. Stock market. Where it goes from here, it's difficult to touch on. I think there will be inflation in the U.S. I think that's my view. And I think that how rates rise and how it's orchestrated is very important. So I think we've got a great company. It's been 3 months for me into the job. We've aligned ourselves to meet our objectives, to maximize shareholder value. We're focusing on our big project, Springpole, almost 5 million ounces, as I mentioned. Golden's also very exciting with the drill results that we have out. And again, looking forward to the drill results in the future to kind of demonstrate that we've got 50 kilometers long strike at Golden. We've only drilled about 2-3 kilometers. That's exciting. So if you look at where we are, we've got 4 properties in Ontario and 1 in Newfoundland with Holbrook. So a very well diversified, large gold resource this company has. We've got a great team. And I would say, please go to our website, learn more about us. I think you'll like what you see. And I really appreciate it if you can join me on this journey.
Jeff Swinoga, CEO of First Mining Gold. Jeff, thanks for coming on Crush the Street with me today.
Great. Yeah, thanks, Kenneth. Really appreciate it.